Everyone, welcome back to a brand new video. As you guys can see, we have a Christmas theme going on here in the office. So this video is going to be about longer term trading or swing trading. So swing trading is easier to understand for most people. It is difficult to swing trade because there's a lot of emotions involved in swing trading, which I will explain in the market as well. But this is something that can be for anyone out there. To make that extra 3 to 5% or even 7 to 10%, depending obviously on the month, depending on your risk management, etc. So this is just something I'm trying to give back to you guys, especially the guys out there working day and night. And you don't always have the time to sit in front of the chart. So this is something for you to identify longer term opportunities that you can actually leave your trade to run for like 2 weeks or even a month. So yeah, hope you guys enjoyed this video. Hi everyone. So this video is going to be about actually creating your own long-term strategy. Okay, so a strategy contains a lot of things. So number one, what pairs are you going to trade? Are you going to trade this 5 pairs? Are you going to trade 10 pairs, etc.? So I will always suggest having 5 pairs and focusing on that specific pairs. Okay. Number two, risk management. So if you have, for example, $100 account, okay, and you say, I'm going to risk, let's say 10% per account. Okay. So you're risking $10 per trade. Okay. Then that is your plan. You need to stick to that the whole time. So you're going to stick to $10 risk until you double your account. You're only going to adjust your risk management once you are on $200. So even if you're on $140, you're still risking the $10. Okay, you're only risking extra once you've doubled your account. Okay, so that's one way to do it. Number two is obviously to have separate accounts. So to have an account just for CAD, have an account just for JPY. So there's 2 different ways to do it. Then number 3 is saying, well, you need different technical components. So the best way to focus on swing trading is to go to a weekly time frame. Analyze on weekly, execute on daily. So this is going to be a simple strategy explained. The only thing you need to learn is trend lines, support resistance, and zones, your supply and demand zones. I'm going to make it very simple for you guys and explain to you guys what you're looking for. So starting off, you can start with either support resistance. If you don't know how support resistance work, go back on our previous YouTube video and go and learn how support and resistance works. Okay, so here we have a support. So market running on a weekly time frame. If it just hits a point and immediately turns back, you know there's a lot of buying pressure from that level. So there we can see price goes up from there, price goes up from there. Goes resistance. You can see price sells from there, price sells from there. Okay. Second component we're adding is trend lines. You can see this is a perfect trending market. 1, 2, 3, third touch, perfect sell to the downside. Number 1, we have a resistance. Number 2, we have a third touch on the trend line. Okay, now we can jump it down to daily. Okay, now looking at daily, we want to check what we can add to our analysis. Okay, let's see if we can find a trend line there. No trend line there. Okay, over there also no trend line. Okay, so now there's a few different options we can look at. Okay, we can search for a spike from this level. Okay, now we can see perfect. There's a spike. We have a lower support here as well because we're looking for reversal trades as we are trading on the bigger time frames. So there's also support there, and we have a spike over there as well. Okay, so I will explain that as well now. So now we can say, okay, well, here's our zone. Okay, we take that out and we can take that out. Okay, so we're looking for a zone here as well. There's market spikes today, so we have a zone there. So now you have your price locked off between that level and that level, so about a 2,500 point range. CAD doesn't move too much, so that's why it's only 2,500 points. Okay, so fundamental came out, news event coming out, market moved to the downside. After news, market corrected itself, broke back above the zone. As soon as you above or below a zone, you know where market's going. There we have price closing below the zone, we have the sell-off. Market closing above, we have the buy. Price hitting the zone, closing below, you have the sell-off. So daily closure is very important in your day-to-day trading. So it makes it easier now to start trading, looking at your daily time frame. So as soon as we closed above the zone, we knew we might have a upside move. There we have a close above. As soon as we close above on the daily time frame, we're looking to scale in on smaller time frames. So now we're taking that trade to the upside, and that is our position with our stop loss below that zone. Okay, so same thing with our trade we had over there. Okay, so there's obviously a lot of technical indication we can add, like FIB, etc. But all we need is that short and long position from our support, resistance, our zones, and our trend lines. So here we have number 1, 2, 3, third touch on the trend line. We have our resistance, we have a double top, and where's our short position? Our short position will be there with our stop loss above and our take profit over there. And once again, a simple 4% trade. If you're risking 10% per trade, that's an easy 40% trade in the time frame of about 2 weeks. Okay, let's quickly check time frame wise. So we sold on 28th October and November, 28th November. So in a month's time, you made 40% by risking 10% per trade. You're risking 1%, then obviously you made 4%. So if you have a $10 risk, you could have made $40 on that specific trade. Okay, so let's look at a different market. Let's look at something like Euro JPY. Euro JPY, a very good swing pair. Let's quickly take out all that. Let's go to a weekly time frame. Okay, here we have resistance at the top. You can also go back in time frames. Price sells from there, price sells from there. Okay, market spikes today, and we just drag that on. And what do you know? Obviously, we spike into that same position. That's probably just news after the news broke back below and kept going down. Now looking back in here, price goes up from there, price goes up from there, price goes up from there. We have a spike over there, and what do you know? We have that zone. Just like that, you have a simple market structure. Okay, now we're going to daily. Okay, you can look to add obviously trend lines. You can look if you have a channel over there. Perfect. We have 1, 2, 3, 4th touch on that level. Okay, so that just adds indication for your trade. So now you have a support. We have the round number of 1 to 8. And we have our trend line coming into play as well. And we have our demand zone. Demand zone rejected, market breaks above, we're buying. Okay, so as soon as we broke above there, with that bullish engulfing candle, we already knew we're waiting for a retest and a buy. Okay, so your long position should have been active already over here, and same thing. So then you would have had a stop loss below that, and that was how your position would look. Okay, same thing, stop loss below your zone, below your previous spike. So now if you're looking at this, something called trade management. So as soon as you're in a trade, we're not looking to trade from minor levels. So this is your major levels, this is your minor levels. Same thing, price sells from there, price sells from there, but we do have that spike over there. Does it mean we're exiting the trade there? No. But rather than risking now 10%, we take 2 entries with 5% and 5%. Okay, so you have 2 active trades. So price hits that point, we close 1 entry. That means price hits there, we're closing 15%, and we have 15% running. Okay, we put stop loss past break even as soon as we reach that point. We know we are risk free. If market pushes up to that level now, then just quickly get back that stop loss. Then we have that bigger trade, and we have 6 times our money, which is then 30%, and you end up making a 45% trade. Okay, obviously you can take that risk management lower. It's all about what you want to risk in your risk appetite. But it's very important to have 2 take profit levels, because there is a big opportunity, well, big chance that the market won't take out that level. And then you can obviously look to trade from that level. I prefer trading from the major levels. Once again, major level, minor level. So, but if it doesn't close above, then we can now look for a shorter swing position, then into lows. Okay, then you'll add 1 position and swing it to the downside into new lows. Okay, and you'll obviously duplicate that profit. So it's very simple as well. If you take a loss on a trade, don't be afraid to jump back into the market on a lower level. So let's say you make the mistake of buying there. Doubt that you will buy there because it's a minor level, and that happens when you buy from minor levels. Let's say you take that loss. Okay, so now you're taking a 10% loss. Okay, this is why you should not get emotionally attached to your trading. All you do is you wait for the lower level, okay, and you take that trade up. Okay, so you end up losing your 10%, but what do? You make back your 70%. Okay, so you lost 10%, but you made 70%, so you're 60% up. Once you're 60% up, you are 6 trades up. You can lose 6 trades and still be profitable. So it's very, very important to stick to your plan and do not hesitate when taking a trade. Let's look at a trade I took today, Euro NZD. So you can also analyze on daily. Once again, if that's something you prefer and something you understand easier, then use a daily time frame. Okay, same thing, price sells from there, price sells from there, price sells from there, price sells from there. Where do we have a spike? Over here. Let me just mark that off for you guys. And we have that level over there. And what do you know? Obviously, we spiked into that level. So that's what I was waiting for. Where's my big support? Let's quickly jump to weekly to find the bigger support. Bigger support will be over here. Price buys from there, price buys from there, price buys from there. Okay, now we jump back to daily. So how's my position looking? Take a short trade over there. Stop loss above there, and a take profit over there. Okay, your NZD has a lower pip count on most brokers, 0.66. So even though you have an 880 point stop loss, it should end up being about 580 points. Okay, but now we're still doing trade management. Price buys from there, we have spikes over there. So now same thing. We have 1 take profit over there. We have a second take profit over there. So take that trade. And as soon as you're going into profits like this, we're already running 1.5% up or 15% up. So you can already take some profits off the table or just lock your stop loss. So both your entries should be risk-free at this moment. So then you can obviously adjust your plan as well. If you are risk-free, you can leave both entries to run to your bottom supports as well. But it's still a good option to take some profits off the table once we reach that point, because then you know if the market turns against you, you've at least made some money. But just like that, if you can take 2 good trades on a monthly basis, even if you take 3 trades, you lose 1 and you win 2, you're still making 40–50% per month easily. Okay, if you're risking 1%, you're still making that 5 to 10% on a monthly basis. 5% a month is crazy returns. I know you guys always want to make 200-300% because that's what some people educate you on, but that's not realistic. It's all about building consistency and having a set plan to keep making that extra profit. Because as soon as you're making 10% a month on a constant basis, that's when you can start going more full-time into trading. Because if you're making 10% from 10,000 Rand, you're making 1,000 Rand a month. After a year, you're 12K up and you're on 22,000. So that keeps building and building and building. And a good plan then is to keep adding money to your fund. So keep adding 5 grand a month to your fund. And in a year's time, you'll actually have a crazy big account. And if you're sitting on, let's say, 200K account and you're making 10%, that's 20K per month. On a good month, obviously, if you're pushing 10%, then you can be making 30-40% if you're risking 10% per trade. So making 30% returns on 2 or 3 swing positions on a 100K account, you're already having a 30K salary. So I hope you guys enjoy this. Like I said, forming a good trading strategy is all about what pairs are you going to trade, what risk management are you going to do, and what technicals are you going to follow. And yeah, that's pretty much it, guys. Make sure to obviously study your pairs, backtrack your pairs, start understanding how different pairs run. Most pairs have a simple way of running, and they all are the same. But it's very important to still understand what pairs works for you, because some pairs might work for me but won't work for you. So it's very important to figure out what pairs is better for you. So the best thing to do is open a pair, look at it, and if you understand the price action happening within the chart, that's usually when you understand the market flow of that chart. And the best thing then to do is add predictions. So go on TradingView, add your predictions, and then from there you'll start understanding what trades you're losing, what trades you're winning. Start with the demo account. Take every single trade that you think is a possible opportunity, and once you win, focus on that specific pairs because you saw something on that trade and it worked for you. So I hope this helps you guys. Hope that you guys enjoyed this content. The reason swing trading is difficult is because of the emotions. Because if you take a short position over here with your stop loss above that, and you have your TP there, so you go to bed here on, let's say, $100, you wake up on $60. What do? You close your position and the next day it goes to the downside. Then you would have made like $200. That's when emotion kicks in and you revenge trade. So now you buy this market because you didn't make the amount you were supposed to make. We don't close above, so you should have been waiting, but you immediately take the buy and then you actually lose your profits. So that's why it's very important, number one, to stick to your plan. If you've made a mistake, don't try and correct it immediately. And number two, be patient. Not once did the market close above our level here. Their market stayed above, went up. Market kept floating between our zone and our buying level. Once we closed above, we bought. So it's very simple. Be patient, wait for entries. Swing trading, you need to be more patient, but there is obviously space to just leave your trades run. Forget about it, let it run, put in your stop loss, put in your take profit, and just focus on what you're doing on a daily basis. All right, cheers guys, enjoy.